As COVID began to play out sometime earlier last year, some really smart early investors figured out that it's China that would be the one that would lead the world economy out of the pandemic. Not me though. But it wasn't only the Chinese economy, but specifically Chinese tech that was leading the way in 2020, and it even outperformed the Nasdaq. However, things started to take a turn sometime in November when Chinese regulators said no to Ant Financial's planned IPO, and this was just days before it was supposed to go live. And as you can imagine, that was a huge slap in the face to Jack Ma, and then he subsequently went completely missing for a few months. And if you look at the Chinese tech index, things were really going all the way to about February, so the party was still ongoing. But then it took a really sharp turn. And ever since then, right until today, as I'm filming this, it has been one long, painful ride down. I'll start by helping you understand what has been happening in the past 6 months plus. And then I'll go into both sides of the argument, for investing in Chinese tech and against it. And then finally, should you be interested, I'll give you a few options for you to consider should you really want to pull that trigger. Hey guys, it's Sunman and welcome back to Your Money Game, the show where we'll save, invest, and feel better about money. So, what the heck has been going on to cause so much trouble in the Chinese tech space? So let's start with patient zero, which was Ant Financial's failed IPO, and the excuse given by Chinese regulators. And from here on, I'm just going to call them regs. So they said that Ant Financial had major issues. And on top of that, they said that the group may fail to meet information disclosure requirements. Whatever that means, it's up to you and me to guess. So for a few months after the incident, things were a little quieter into the new year. But come March, suddenly you began to see other players getting called up by the regs to come in for chats. For example, Tencent was called up and told to restructure their financial services. And then there were a few other issues that the regs brought up, such as unfair monopolistic practices, things that hurt the consumers, and in some cases there were unlicensed operations as well. Now, this all coincided with a double whammy in April, where the Chinese government also began to tighten credit. So that was in April. Fast forward a couple more months, and then you had this major incident with Didi, where when they listed, the moment they did, boom, they received a nice welcome letter from the Chinese regs that said, hey, we're coming to investigate you because there's some issues that we found. And then there was ByteDance, which is the parent company of TikTok. They also put their IPO on hold. The reasons cited here began to become quite interesting. It was more so about data security, but related to national security because the Chinese didn't want any of the data falling into the hands of the Americans. Now, as you can see, there are a few interesting reasons that have been brought up over the past 6 months, but a great article which I've attached below summed it up in a few key points. In a nutshell, the CCP really just wants to ensure that whatever policies that it has made is not being challenged or disrupted by big tech. There were a couple of interesting examples cited by the article. One was that young people had access to easy credit and therefore are able to spend to buy stuff. Now, in the eyes of the CCP, that causes discontent. Another interesting example was that the online education sector was beginning to face scrutiny as well because they were seen by the CCP as preying on the anxieties of parents, and so in their eyes this would increase costs, but on top of that also discourage parents from wanting to have more children. So I really encourage you to read that article below because it's really interesting. And while you're at it, hey, if you're getting value out of this, I would appreciate your support in clicking that like and sub button because that tells the gods of YouTube to share this video out to more people. So now you're caught up to what's been happening and you're staring at the prices and you're wondering, is now the time that I should get in? So let's start with me putting on a black hat and trying to take the opposing view why you shouldn't consider investing now. The obvious one is that the Chinese regs are not yet done. In fact, some people believe that they've only just begun. And they started with financials, they went on to data security, they talked about national security. So the question is, what's next? The second point is the sliding relations between US and China. It's been a problem for a long time now, even last year when I made my initial China video. The question really is it going to escalate further, or is this going to kind of tread sideways of just this tit for tat issues? The additional concern is how China is relating to other countries as well. And if you've been following the news, there have been issues with Australia, there have been issues with Europe, there have been issues with Japan, and of course there's this issue with Taiwan, and whether or not they are going to try and take back what they believe is theirs. Now, I believe that if they do take some serious military action to take back Taiwan, there's gonna be much bigger issues than having a tech sell-off. Finally, you have some really big names in the investing world avoiding China or reducing their exposure to China. So celebrity investors such as Cathie Wood recently cut some of her positions, and she believes that there's a valuation reset. And in her point of view, she's saying that even though valuations have dropped so low, they're likely to stay low for longer. And she's not alone, as there are some other major players which are having the same point of view, such as Morgan Stanley and even BlackRock. As you can tell, there's a lot of fear and negativity, but there are camps that have arguments for investing in China. Let's get to those points. Starting from a valuation standpoint, many investors feel that, hey, prices have gotten so low that Chinese tech is really at a discount, especially relative to US tech. Taken alone, that data point is already quite interesting, but it becomes even more interesting after you start comparing it with this guy's analysis. He compared the 4 massive Chinese tech companies to Amazon, even though the 4 combined generate 70% more free cash flow than Amazon. If you take all their valuations and you combine it together, they're still valued lower than Amazon. And if you looked it up on Google or YouTube, you'll find many players analyzing specific stocks to show you that, hey, valuations and growth prospects taken together really are painting an interesting point of opportunity. Next is that there is broad economic growth in China, which is much faster than the rest of the world. And on top of that, it's an economy that still has quite a lot of tools to deal with any economic slowdown. And when economies are slowing down too much, governments tend to step in, reduce interest rates so that the cost of money becomes cheaper, and therefore businesses can borrow more and therefore expand. And if you looked at all the developed markets such as US and Europe, interest rates right now are rock bottom. So it's very difficult for the government to use that as a tool to spur economic growth. China, on the other hand, has a much healthier interest rate, and on top of that, they haven't been printing money and just dishing it out to people as a whole. So they've got a lot more firepower and tools to control growth, or rather manage growth upwards if things go wrong. The final reason is my personal speculation, and it's to do with pessimism. And in the markets, when you have such extreme amounts of pessimism, it's usually a sign that things might be bottoming. And this hopefully would create a situation where there will be net more buyers versus sellers, therefore allowing prices to rise. So those are the main arguments on both sides of the camp. Now for me, as a disclosure, I've been holding on to KWEB for a while now, and as of last week, when I saw some extreme price action, I actually added a little bit more to that position. For you, if you're still debating on whether you should get in, I think the main consideration is actually your time horizon. Assuming that none of us can actually pick an absolute bottom, the prices and the valuations right now already represent a pretty good opportunity. Yes, it's risky, but at the same time, there might be worthwhile results if you can wait it out for long. But I'm curious to know your point of view. Do you think that the pain is over? Did I miss out any key points? I would love to hear it in the comments below. The final section is really what are the options you have if you are interested in getting your feet wet. I'm not a stock picker, but if that's your style, power to you. There are many more resources out there that can help you select and maybe analyze those stocks. For US listed ETFs, I have already mentioned I'm personally holding KWEB, which is fairly concentrated with about 42 stocks. If you wanted something broader, which is similar in nature, you could try CQQQ, and they hold about 102 tech stocks. If you wanted something that really tracks an index, you can look at KTEC, and that tracks the Hang Seng Tech Index specifically. You could also get it through a Singapore listed ETF, which is the Lion OCBC Hang Seng Tech ETF. You have two options here. With the ticker symbol HST, you get access to the Singapore dollar version, and with HSS, you'll access the USD version. If you wanted some broader exposure, there's also something else you could consider, which is MCHI, which is a US listed ETF. It holds 555 stocks, and on top of that, 43% is weighted towards tech. So you get a fairly large exposure to tech, but you're balancing it out with other Chinese sectors as well. Of course, those are just the popular options that I'm personally aware of, and I'm very sure if you wanted to find more, there are many more for you to consider. Nevertheless, I hope you guys found this useful, and if you did, I would appreciate your support in clicking that like, subscribe, as well as that bell button, because I'm going to be back again next Sunday with a brand new video. And until then, you take care and keep playing your own game.